I think people would see this and say, what? Like, I thought everybody owned Apple. You mean there are actually people who don't?
No, I hear you. But what we do is we compile a bunch of 13F filings, obviously 45 days after the end of the close of the quarter. And we look at the top 100 institutional active managers, aggregate their relative weighting in these 15 different mega cap or large cap tech stocks. And ultimately what the answer is that Apple's weighting in the S&P is, call it, just shy of 8%. And Apple's weighting in the top 100 actively managed institutional portfolios is closer to just under 6%. So the answer is yes, Apple is underowned more so than any other mega cap tech stock today for the first time in 4 years, taking the baton from Microsoft.
I mean, it would seem to me the obvious answer as to why this is because all of those other companies that we think about are all the ones who are laying out their AI strategies. And that's where all the hype is. And we're still kind of waiting to find out what this is really going to mean for Apple moving forward. Is there any truth to that?
No, I think that's fair. I think the other angle here, too, though, is remember, this is as of June 30th. So this is pre-earnings. Pre-Apple earnings, but ultimately, if we think about what happened in the June quarter, Apple has been on fire effectively since February. It's been was a massive outperformer, and I think this is the market reaction to valuation. Frankly, looking at numbers and saying, well, Apple is still declining in the near term. There's the potential to get back to growth in 2024, which I am bullish on, but ultimately they need to put those numbers up, and I think investors got a little bit concerned, at least, with where valuation was as we got towards the end of the quarter, and we're looking at Apple trading, again, closer to 30 times PE. So I do think it's partially AI. I do think it's partially also valuation and investors just being mindful of Apple's run-up year to date.
Makes me also wonder whether, you think Apple's near-term direction is not going to be Apple's decision to make. I mean, there's nothing that's going to happen in the very, very near future. Now, of course, they have the upgrade cycle coming in September, but it's potentially going to be driven by, in part, what NVIDIA does after the bell today, or wherever the AI story continues to go, and the overall drag higher that story has meant to megacap.
I think you're exactly right. I was listening to your prior group, and I think a lot of what they said resonates with me in terms of if you get a really positive report from NVIDIA tonight, if you look at interest rates and they do fall lower in the near term, that's ultimately positive for stocks, Apple, included in that group. Now, you're right. We are in a bit of an information vacuum. We aren't going to get any real news on Apple until mid-September when the iPhone launch comes. Ultimately, I do believe that can be a catalyst to drive numbers higher. I think this will be actually a good iPhone 15 cycle. But I think you're dead right that within the next 30 days, a lot of the way that Apple will trade will be dictated by broader macro movements, and again, by NVIDIA tonight.
What's your pushback to those who say that it's just too rich, Apple, it's just too expensive, 30 times? Yeah. The fundamentals aren't phenomenal in the environment we're in with rates where we all know they are. How do you push back on that?
When I started working at Morgan Stanley here in 2015, I heard the same narrative as Apple is expensive. If you made that call, you ultimately would have massively underperformed because Apple has been a great outperformer. It's gone through different business model pivots that have ultimately driven the multiple higher. Listen, I think today it's fair that Apple has gone from, call it 190 to 175. This is a bit of a consolidation that was needed after the stock was effectively up and to the right for the better of 6 months. What I think needs to happen is that numbers need to move higher. And ultimately, that will give investors kind of the confidence to say, okay, I am willing to pay whatever it may be, 25, 30 times for this stock, not just because of the near term, but you also have to think big picture, longer term. Apple just added 150 million new users to their installed base last year that are at the very beginning of their monetization curve. I would argue they're not really impacting the model. So when we look at, for example, fiscal 24 EPS, is that reflective of the past user base and their spending and their profitability, or is it reflective of these new users that are coming on board? I'd argue the former. And so ultimately, maybe what I'm saying is that the quote-unquote normalized earnings power of Apple's installed base isn't necessarily what we're seeing in fiscal 24. It's what we're seeing further out. And on that basis, then Apple would actually be cheaper than the market thinks it is today.